Hi, all. This is an overview to help you determine the best structure for your business. As an aside, there'll also be some things related to you as a person, whether it's you as a freelancer or you as a music act, that will also be of interest. So one of the questions is, what's the best structure for your business? A couple questions you might want to ask yourself. Do you have personal assets that may be at risk? At this point, you may not. You may have just a car, a small amount of money in your bank account. If that's the case, then there's not a lot of personal assets at risk. I have several cars, I have a house, I have a family that are relying on me. Then my personal assets, I don't necessarily want to put them at risk. Do you need money? Do you need investment? The fancy word is capital. Do you need working capital? Are you interested in having shareholders, stakeholders, investors in this? If you do have investors, do you want to maintain control? And if something should happen to you, what should happen to the company? So let's talk about the business types. Sole proprietorship, partnership, LLC are going to be the main three we concentrate on. There's a couple different types of corporations, and then also you could run your business as a nonprofit. So let's break these down into smaller bites. Sole proprietorship, pretty easy. The number of owners is one. And the sole proprietorship is just a fancy way of saying that you are the business. It's one and the same. There's no delineation between those two things. And about 75% of all businesses in the US are sole proprietorships. Examples of sole proprietorships would include these. So if you're working freelance, if you're an audio engineer or working anything, you are a sole proprietor. You might have a house cleaning company, an Etsy store. All of these are versions of sole proprietorship. With a sole proprietorship, you can operate under your own name. So if your name is J. Smith, you could have J. Smith Auto Repair, or it's possible to operate also under a fictitious name. This would be, for instance, Big City Auto Repairs. Both would still qualify possibly as a sole proprietorship. What you would be doing is filling out a form with the state that says you're doing business as, or a DBA form. And this is then to operate as a trade name, that they recognize that if you're Big City Auto Repairs, it is J. Smith, and J. Smith is operating Big City Auto Repairs. The state then knows how to make that link. One of the things you have to find out, though, is if this fictitious name is available. And if it is, then you can use it. But there is a search that needs to happen. That also then determines if you want to go online. So if there's a Big City Auto Repairs in a different state, you then obviously don't have access to that name. So that search is really important. The advantages of a sole proprietorship are numerous. So one, it's the easiest to start. You can think about it at breakfast, start at lunch, and you can end it at dinner. It's that easy. A sole proprietor may have employees. So a pizza shop may be a sole proprietor and pay employees. That's not the problem, but the owner is just the same thing as the sole proprietor. It's the least expensive to set up. It has the minimum amount of paperwork to file, and if you file the DBA form, there's just a few things like that you need to register. With the sole proprietor, you have the most amount of control. So you are the owner. Obviously, then all the decisions are made for you. All the profits go to the owner, which is obviously a great advantage. There's very little government intervention. And then as far as when it comes to paying taxes, it's simple. The sole proprietor is the business. There is no business taxes to file. Everything goes on the sole proprietor's tax filing. So what are some of the disadvantages of a sole proprietorship? The biggest with a sole proprietorship is that everything that the sole proprietor has is at risk because the company and the person are the same. So houses, cars, bank accounts, stocks, all those things are at risk if something were to happen. So if you own a pizza place and someone gets hurt or poisoned, something really catastrophic, obviously, that puts everything at risk for the sole proprietor. There's not a ton of tax benefits for a sole proprietor. In fact, if you do well, it could put you in a higher tax bracket because you are the owner, so you combine your business income plus your personal income, should they be different or commingled, it doesn't matter. All that then becomes one. If you're just a hobbyist and you're not a professional at this, you don't get any deductions for that. And if you're a business, then you have to claim a profit at 3 out of the 5 years. You can't just keep saying, I'm a professional, but I'm not making any money because you're using so many deductions. It's not possible. Obviously, the business is based on the owner's reputation, which is really important. Access to funds might be limited. If you're a sole proprietor and you don't have a lot of money in the bank or collateral to get a loan, then obviously that'll be of issue. And then if something were to happen to you as the owner, you cannot pass that on. Since you and the business are one and the same, if you pass on from this earth, then there is no more business to pass on. I mentioned this kind of quickly because it's related to taxes, and this becomes then a personal side. So one of the things that you have to do as a sole proprietor is report your income on what's called the Schedule C. And I'll make sure you get a copy of this. So you would fill out your tax form, and the Schedule C would be anywhere that you receive money. So if you're a freelance and you've received more than $600 from an entity, and I know a lot of you have, you would then get what's called a 1099. And on that 1099, that's where you would claim that income. You are a business if you've received money from freelance. For instance, if you have a studio set up in your living room, there is no deduction for that. Any studio space that you would try to write off on your taxes would need to be an exclusive space. If you can make an exclusive space, there's a lot of different benefits and deductions. Again, I hired an accountant, and I suggest that you think about doing the same. It's money well spent. But if you have a home studio and it's an exclusive space, then you would get to deduct 1/5 of your rent, 1/5 of your insurance, 1/5 of your utilities, things like that. There's a lot of benefit with that, as well as mileage, travel, concert tickets, anything gear you spend. Those are possible deductions. There is a new tax code in place that's very confusing, and I can't claim to understand it. So again, accountant would be something to recommend. And finally, with sole proprietors, especially for you as an age group, unless it's been a tax since I've cut this video, you are able to stay under your parents' insurance until you're age 26. Otherwise, there is a health insurance on the exchange that you can sign up for, and there's deductions for that as well. One of the things I would point you to is the irs.gov, and this is to you as a group, whether you need to file your taxes or not. And there's a whole workflow online that you can go to, and I've got the irs.gov page here, and what you do I need to file a tax return Google search will take you right here, and you can begin the workflow. This is what a Schedule C looks like. You can see it says profit or loss from business. So any of those 1099s, anything from your business, money that you've brought in, as well as deductions, all would go here. This is the addendum to your personal taxes for a sole proprietor.